November wasn't just another month for XRP. It was the month everything shifted. For the first time since regulatory clarity hit earlier this year, we saw a flood of institutional interest, a surge in on-chain activity, and a wave of ETF inflows that caught almost everyone off guard. As we walk through the biggest XRP news that unfolded from November 1 to November 30, we can see a pattern forming. And if you ever wondered whether XRP is finally stepping into the phase we've been waiting years for, well, this month gave us clues louder than ever. And if you think November might just be the turning point for XRP, hit that like button, because what we're about to unpack tells a story bigger than just a price chart. In this video, we're breaking down the 8 most important developments of November, the facts, the numbers, and the momentum that pushed XRP into the spotlight. From ETF inflows totaling hundreds of millions of dollars, to massive network growth, to the ecosystem shakeups that made XRP dominate headlines, we're going through everything, one event at a time, so you walk away knowing exactly what changed, why it mattered, and what it could mean for the months ahead. Let's get into section 1, because the first thing that happened this month set the tone for everything that followed. ETF inflows surge and institutional demand explodes. Something happened in November that XRP investors had been waiting on for years. Large-scale institutional money finally entered the ecosystem, and it did it fast. Throughout November, the newly launched XRP ETFs recorded one of the most surprising debut performances in the entire digital asset market. By November 24th, total XRP ETF inflows hit roughly $587 million in net positive inflows, a staggering achievement considering these products weren't even seen as major contenders earlier in the year. What shocked analysts even more was that on November 24th alone, new ETFs saw $164.1 million poured in, a single-day inflow stronger than what BTC, ETH, and even Sol saw for their comparable ETF products on that same day. This flooding of institutional capital didn't just support price, it sent a message across the entire financial space. XRP had officially entered Wall Street territory. After years of uncertainty, the November numbers proved that institutional demand wasn't a theory, it was happening now, and it was happening aggressively. Analysts tracking ETF order books noted that the speed of accumulation was unusually fast for a first-month launch, with some models suggesting that if this rate of inflows continued, ETFs alone could absorb tens of millions of XRP per day. And here's what made November truly remarkable. These inflows were coming despite XRP price trading in a relatively tight range. Institutions weren't buying a hype pump, they were buying the asset itself. They were buying liquidity. They were buying exposure before the market caught up. They were buying in anticipation of something bigger. This set the tone for November. Quiet accumulation from the biggest players in the market. But what followed next proved that this inflow wasn't just investor excitement, it was a reflection of something deeper happening on the network itself. Massive network growth, wallets, DEX activity, and on-chain surge. As ETF inflows accelerated, something just as important was happening directly on the XRPL. The second week of November saw a huge spike in new retail wallets, with XRPL Analytics reporting over 21,000 new wallets created within a 48-hour window, the fastest growth rate the network had seen in months. And unlike previous spikes that were dominated by dormant accounts, this surge had high activity levels attached. Users weren't just making wallets, they were interacting, trading, and moving value. Daily XRPL transactions also climbed sharply throughout November, with on-chain activity rising across retail wallets, DEX protocols, and cross-border settlement features. Even more impressive, the XRPL's decentralized exchange hit record-high daily volumes, climbing faster than at any point in 2025. Part of this momentum came from traders moving into XRPL meme coin ecosystems, but a significant portion came from legitimate liquidity migration. DEXs were no longer niche XRPL components, they were becoming a central part of the network's utility. Interestingly, November's data also revealed a shift in wallet dynamics. While some large whale wallets trimmed their holdings, retail wallet activity skyrocketed. This wasn't bearish. In fact, it reflected a broader, even healthier distribution of XRP across active users. Millions flowed through DEX routes, cross-chain bridges, and new liquidity pools. The XRPL felt alive again, and that was something we hadn't seen at this scale in years. But what came next was even more critical, because November didn't just bring demand, it brought one of the most important supply events of the month. The November 1 billion XRP escrow unlock and supply management. Every month, XRP sees a scheduled release of 1 billion XRP from escrow, and November 1 was no exception. But what mattered wasn't the unlock itself, it was how little of it actually reached exchanges. Based on Ripple's historical pattern, analysts estimate that only 200 to 300 million XRP from that billion likely entered circulation, with the remaining amount relocked back into escrow, maintaining a controlled and predictable supply cycle. This was a big deal because it directly intersected with the ETF inflows earlier in the month. With institutional buying absorbing huge amounts of XRP daily, November's circulating supply increase didn't create pressure. It barely made a dent. For the first time, some analysts argued that that ETFs might be creating a quiet supply squeeze, pulling more XRP off the open market than Ripple was releasing. This dynamic created a rare condition for XRP, demand outpacing liquid supply, even while the price remained stable, and it also led analysts to flag November as a foundational month for potential long-term upside. Nobody was calling for moonshots, but the structural setup was undeniable. And because this story is only heating up, if you want full breakdowns of these supply mechanics every month, make sure you subscribe right now and hit that like button. We're building a community that tracks XRP on a deeper level, and you don't want to miss the next update. Now let's move to Section 4 because November also brought a massive regulatory shift. Regulatory momentum, a cleaner landscape for XRP. One of the quietest but most important themes of November was regulatory confidence. After years of uncertainty, the Ripple SEC case finally wrapped earlier in 2025, and November was the first month where we saw the full impact of that decision play out in the broader market. With XRP no longer being dragged through legal ambiguity, institutional money felt comfortable entering for the first time. And this wasn't just speculation, we saw it in hard numbers. Market reports emphasized that November's surge in ETF inflows was tied directly to clarified classification and regulatory green lights. No more guessing, no more fear around listing licenses, and no more institutional hesitation. Instead, major finance players publicly acknowledged XRP as a legitimate, investable digital asset. Even in international markets, similar confidence was growing. Financial centers in Europe and Asia echoed the sentiment. XRP was back, regulated, and safe for large-scale participation. November officially marked XRP's return to the global regulatory conversation, not as a question mark, but as a recognized player. But things didn't stop there. After stability and clarity came something else the XRP ecosystem desperately needed. Trading volume skyrocketed, liquidity returns to XRP. Alongside institutional flows and regulatory clarity, November delivered one more major milestone, an explosion in XRP trading volume. Some exchanges reported month-over-month increases as high as 90%, with global trading volumes breaking multi-month highs. This surge didn't simply come from hype. It was a natural response to the liquidity entering the ecosystem. By mid-November, XRP's global 24-hour trading volume had climbed into the multi-billion-dollar range, showing a massive resurgence in market activity. Traders were coming back. Institutional desks were allocating more heavily, and DEX volume on the XRPL was rising in parallel. This created a ripple effect. Liquidity attracts liquidity. And unlike the temporary surges of previous years, November's volume was sustained, consistent, and visible across every major exchange. In short, XRP was liquid again, and that alone was enough to reignite confidence. Now let's move to Section 6, because while November was full of momentum, it wasn't without challenges. Market risks and red flags. Not everything was bullish. Even with all the positive news, November showed us a few warning signs. Some technical analysts pointed out that XRP was struggling to break above the $2.36 resistance zone, bouncing between $2.16 and $2.36 throughout the month. This consolidation wasn't bearish, but it did reveal that the market wasn't ready for a major breakout yet. Whale wallet trimming in early November also sparked fear for some investors, with several large addresses offloading portions of their holdings. Analysts debated whether this was routine profit-taking or early signs of upcoming volatility. And while retail activity surged, some saw this as a temporary spike driven by short-term speculation. On the macro side, global markets were tense, with inflation reports and interest rate uncertainty creating hesitation across risk assets. Bitcoin dominance also rose slightly during November, forcing altcoins like XRP to fight harder for attention. Still, despite these challenges, XRP held its ground. And that leads us into the final developments of the month.
November's biggest surprises and unexpected headlines. November wasn't just about inflows and growth, it delivered a few unexpected storylines. The first major surprise was the sudden discussion around XRP supply shortages in the ETF markets, with some analysts warning that institutional demand could create structural scarcity by early 2026 if inflows continued. Another late-month shock came from Ripple's ecosystem expansion. Partnerships, fundraising initiatives, and new XRPL-based projects gained traction throughout November, helping strengthen the long-term fundamentals of the network. These weren't headline grabbers, but they were critical building blocks. And then, of course, came the speculation. Could November's consolidation be hiding a much bigger move? Could ETF accumulation be setting the stage for a slow burn rally? Could this month be the beginning of XRP's transition from a retail-driven token to a fully institutionalized asset? These questions dominated crypto conversations, and the answers may not be far away. What November really meant for XRP. As the month closed, it became clear that November wasn't random, it wasn't noise, it was the turning point. For the first time in years, XRP had all three pillars aligned: institutional demand, regulatory clarity, and network strength. ETF inflows reached nearly $600 million, wallets exploded with new growth, trading volume surged, on-chain activity hit multi-month highs, and all of this happened quietly, without a major breakout, meaning everything we saw was foundational, not speculative. The real story of November isn't that XRP pumped, it's that XRP stabilized its strength. It rebuilt, it matured, and it reclaimed its role as one of the most relevant digital assets in the world. If this was the setup, then December and January could be the real reveal. And if you want me to keep breaking these monthly recaps with real numbers, real insights, and zero hype, make sure you subscribe, hit that like button, and drop a comment telling me which November event stood out to you the most.